Markets are settling into the holiday mood. The year is about to end. And earlier today, I released my learnings from the year 2024 in a special video, Learnings from a Tough Year. This video should be useful for you for planning your way into 2025. And in the local markets right now, there is no doubt that people want to lighten up. But there's a tinge of greed in the air. People want to sell, however, they need Nifty above 24,000, perhaps 24,500 levels to get out of losses, at least for now. This story may pan out for some time. Most stocks, see, Reliance went up, came down, TCS went up, came down. Most stocks will be range bound, volatile, but generally every uptick will get sold into. This picture of Nifty was very different at roughly 10 o'clock or 10:30. Somewhere around 10:40 came the fall. And after that, the bulls did not appear again for the remaining day. Yesterday, I talked about Nestle. Today, I bought another beaten down stock, Coal India. And in the Nugget section, I'll talk about why I bought the stock, which is down a lot. And 50 DMA is below 200 DMA and stock price is below both of them. Same as the case of Nestle. While FIs went on vacation, one panda bear got left behind. And that beer was enough to pull down the markets completely. Overall, the contest seems well balanced out. 22 stocks up, 28 down. The stocks which were taking Nifty up, that included TCS, ITC, Tata Motors, Adani Enterprises and M&M. Two red stocks in the top 5. What was taking Nifty down? JSW, Steel, Titan, Power Grid, Infosys and SBI. Next 50 also, reds increased in count. Indigo is at the top today. In general, travel related stocks, hotels, they will be up for some time. The other next 50 stocks pulling the indices up were GAIL, ICICI Prudential, TVS Motors and United Spirits. Reasonably balanced out tug of war between bears and bulls. However, 3 large sectors with the bears and 2 with the bulls. Consumption was at the top, followed by auto and beverages. At the top, we still have hotels and entertainment, followed by pharma and beverages. Nifty went up early in the trade, then came down. The volatility was limited to this trend change. Now, Bank Nifty may appear to be a bit volatile, but this was a very small trading range, 0.4%. Bank Nifty wise, SBI is not looking good at all. Just 3 greens in the last 2 weeks. ICICI Bank is lot better. And HDFC Bank, even lesser greens, just 2. And while HDFC and ICICI Bank, they are showing red. However, those cuts are not that big and both of them along with Bank Nifty continue to be in the green zone. There was hardly any interest in the banking pack today, especially the larger banks. Just RBL Bank, which has been beaten down a lot in the recent past, that was up 5.3%. However, public sector banks continue to sulk with low volumes. KFin Tech made another high with rocket volumes, 4.4%. I have to check this graph many times just because of KFin Tech, whether the charts have been regenerated for the day or not. Overall, besides the top 2 players, HDFC AMC and Motilal Oswal, which refused to budge, there is optimism in this pack. Hardly any interest in the big boys, indicated by the lack of volumes. Now, 0.2% cut in IT pack does not look big, but that's because the heavyweight TCS, that was up, but more stocks were in red than green. Also, we no longer see fresh highs in this pack. The number of greens also has reduced. Fortunes change very quickly. And people who are not seeing the winds of change, they may get caught at the top of the IT pack. The smaller players in the telecom pack, they were partying today. Tejas Networks I talked about yesterday only, that was up 3.4%. Most of these stocks were trying to go up. However, many of them cooled down towards the end. There could be a rally brewing in this particular sector. I mentioned yesterday also on 2nd or 3rd of the January month, You will see the updated numbers for this month and quarter. Auto stocks have started moving up a bit in anticipation. And auto stocks usually on the way up take the ancillaries with them. In defense pack, the show was stock specific. Solar Industries was up 5.1% and Zen Technologies as usual hit a new high. Very first thing in the day, but then it cooled down and became range bound. See the rally in Zen. This is nearly a 700 point rally, approximately 40 to 50% gains in just last 1 month in a single rally. The stock, however, is now trading at a PE of 106. No respite in general for metal stocks. Hindustan Copper was up and so was Adani Enterprises. Vedanta went ex-dividend, but look at the pattern of reds ahead of the dividend. And I talked about this point in today's video also, which I released earlier today. And the other stock from the same stable, Hindustan Zinc, which is owned by Vedanta only, that shows similar pattern, actually worse. Oil and gas today looked good. Reliance and ONGC did not move much, but the rally was in the middle tier. MRPL was up 4.5%, HPCL up 2.3%. Castrol also was up a lot, but then it cooled down with the market sentiment. Power sector still sulking, most stocks red and on low volumes. Not much optimism in the renewable pack as well today. Pharma was very stock specific. Mankind Pharma corrected today, but Biocon was up. Sugar pack select stocks were on fire. Triveni was up 8% and Dalmia Sugar that was up 5%. 7x volumes for Triveni. Consumption has started looking good. That was at the top of the sectors making money as well. Most of the large stocks were in green. Just a reminder that Varun Beverages and Devyani Foods, they are same group and Varun runs both of these companies now. Non-edible pack also looked lot better today. Gillette was the star, up 7% today. Imami as well, up 6%. No big cuts. Also no fresh lows. Is it time for consumption to raise its head? Most alcohol stocks also were looking good only. Only Godfrey Phillips was down in the tobacco pack. Most of the companies in the middle are at a stone's distance from their 52-week high. Railways is not moving at all, though we are just 1 month away now from the budget. Top 5 stocks continue to be in the red. Not a great sign in terms of expectations from the budget. Tata Group was looking good today. The bottom tier was especially optimistic. Tata Group has announced that they will take live Tata Capital soon. Tata Investment is generally seen as the proxy for Tata Group. That is not the case. That part is Tata Sons, not Tata Investment. Tata Investment has limited stake in Tata companies. Adani Group was mixed bag. Select stocks were up. Adani Enterprises, Adani Wilmar and NDTV. The reds returned to Indian indices, and the comical part is today auto was up a bit. FIIs continue to sell. Today's sell figure was minus 2,500 crores. DIs bought slightly more than that. DI buy number for the month is now above 20,000 crores. There is some trouble brewing for Nippon India Mutual Fund. This may reflect in the stock on Thursday. It is under CBI scanner in the Yes Bank ATI bond issue. Usually stocks tank 8-10% whenever there is such kind of inquiry. Not good for the stock. Also, RBI is saying that the growth indicators are showing economic recovery in rural. The agri and rural consumption numbers are looking up. Just for context, Tata Capital, the share price surged 50 rupees today in the unlisted market. This will shoot up further, probably at least go towards 1100 in the next week or so. My trades for the day, nothing sold today also. I bought a bit of Coal India and this may bring a smile on your face, a little Asian Paints as well. Here I am averaging down to some extent. If these stocks go up, I might sell the old stocks which are at a higher price. And why I bought Coal India, let me talk next in the Nugget section. Coal India, let me first talk about a press release from the Coal Ministry, slightly dated. The coal production growth between 2022-23 and 23-24, that was up 9%. And there was a decline in the import prices of coal, which means international prices of coal were going down. And if you see the trend of coal prices globally, it reflects the sentiment. These prices peaked because of the Ukraine war somewhere around 2022 and 2023, went up from around 150 levels to 450 levels, literally tripled. Now in this particular period when the prices were down, it was more profitable perhaps from government's perspective to save the national reserves and import from outside. The import is done by Adani Enterprises and Adani Ports combo. Right now this is weighing down on the country because especially the currency is under pressure, all-time lows. Looking at the performance of Coal India stock price, it is fast moving towards a 52-week low, not too much distance to go. RSI wise, it has been in the oversold zone for the last few months. This has not been the case in the last 1 year at all, while the prices were going up steadily. Revenue wise, there was a cut in the previous quarter September results, which is what we are seeing in this downward trend. And I'll show you why this is overdone. EPS also reflects the fall in revenue to a large extent. These graphs are courtesy Money Control. Now in terms of dividend, there is no change at all. In fact, Coal India is giving slightly more dividend than the previous financial year only. Approximately they give out 40% of their earnings as dividend. Government's new guidelines are 30%. They are giving more than that as of now. Shareholding pattern, promoters, which is government, no change. FIIs have increased. DIs slight dip, public slight dip. The prices exactly are at the median P. EPS has got a bit stuck right now because the coal prices internationally are stuck or actually down. In fact, if you see, there is no dip per se in the EPS, which means that international prices have softened, but the domestic prices have not been reduced at all for coal industry. As a result, the PE has come down for Coal India from approximately 9 to 6.5. Now, quarterly result wise, if you see September, there is a dip. September, there is a dip. September, there is a dip. This time the dip is more. Why? Because the rains were excessive. The coal mines were filled with water, and as a result, coal could not be mined in the previous quarter. In fact, Coal India will probably go in overdrive now to make up for the lost numbers. And this time Coal India has been given 10% higher target by the Ministry of Coals and the government for the next financial year. They'll have to pull up the socks and deliver. The cost typically remains same because most of it is labor and machinery, and this reflects in reduced OPM for Coal India when the production goes down. There are two things which you should see in Coal India's balance sheet. One is the ever increasing reserves. Something will be done with these reserves. It could be an extraordinary dividend. It could be a bonus. Capital work in progress also shows that something is being built, possibly some expansion for the targeted 10% increase in coal production domestically. Overall, I don't see much of an aberration or a problem besides the dip in the September numbers. That reflects fairly in the stock price, which have already fallen a lot from around 550 levels to about 375 levels. Good deep correction already in place. And this is one stock which I'm happy to keep for even 1-2 years. If I'm stuck with it, I don't mind, because at some point it will go back to 500, 550 levels, and that will give me decent profit even if I hold it for 1 or 2 years. Hope this was useful. Thanks for watching. Merry Christmas, and I will see you on Thursday.